Yesterday, I did the unthinkable. I shorted the market.
Huh?
And specifically, I shorted the Japanese stock market, and I did that on live stream. I'm currently still in the position. I want to discuss a little bit about why I did that, where I think indices could go from here, and of course, gearing up for tomorrow's big CPI event. It has the potential to really move markets, and we've got a lot to cover. Let's jump in. So on the Monday open, I was looking at the Japanese stock market and I wanted to get short. And there's a specific reason I want to discuss why. But from a price action standpoint, first, we can see that on the 4-hour chart, we had a nice move lower, followed by a retracement up into this area of resistance where we previously found support. We took out those lows and really trended lower. So when we bounced back on Monday morning, I was looking for an opportunity to get short, which is not something I usually do. And the reason I kind of made a big deal about going short is because traditionally I like to be more on the long side of indices. I find it to be a little bit more suitable to my standard strategy of looking to trail stops. In fact, I'll discuss maybe a little bit of that in an upcoming video about how I like to short indices when I do choose to short them. But for now, basically, I have to change my strategy just a bit for the short side due to the different nature of the market. Markets typically trend slowly up and quickly down, slowly up, quickly down, and over the very long term, they do typically trend higher. So I want to talk a little bit about what I plan to do with this position and what I'm watching for going into CPI. We've got to talk about the dollar index. We've got to talk about gold and so much more. So let's just briefly start with where the global stock market kind of situation sits. Last week, we saw the S&P 500 have a real big drop, and on the Monday bounce back, we saw price come up into kind of where we currently sit. I want to talk about why I am still thinking that for now, I'm more on the cautious side of indices. I'm not just looking to outright buy the dip. And the first price action signal is that we did technically failed to take out the previous highs off of this big leg higher. And that to me had a big concern, especially when we saw this really heavy red candle start flowing into the market. And my choice of specifically shorting the Nikkei, which is down 1% or so at the time of recording this, was actually because last time around, the Nikkei took a real big hit to the downside, or last NFP, the jobs data really triggered some heavy selling in the Nikkei, the Japanese stock market. So I wanted to potentially try and take advantage of another slide if it wanted to set up again. But I also wanted to discuss the signal that we're getting off of the Edge Finder, which is, again, a bearish signal, a -6 score when looking at the fundamentals here. Now, I've just navigated over to the data scanners page here, and I've selected stock indices, and I just selected the Nikkei from the top right here. Now, the reason I just showed you that is this is so that if you have the Edge Finder, you can mimic or copy what I'm doing here, which is I'm just going through the fundamental analysis when taking a look at the Japanese stock market. Where did this idea come from, Nick, to get bearish? Well, I wouldn't have thought of it just by staring at the chart. It was mostly the fundamentals. Seasonally, it is a bearish time, not just for the Nikkei, but for most stock markets globally, where we see a historical downward month in the month of September. So I was already cautious, but then when we had enough kind of stacking factors here to look to get bearish, we have a downward trend off of the daily chart. And we see some statistics that are looking unpromising for the Japanese stock market, which is, not a particularly impressive economy right now. They're struggling with an aging population. They're struggling to get any sort of meaningful growth in their economy. And so it is a candidate here. If I'm going to get bearish on the markets in general, the U.S. stock market is, in my view, harder to short than perhaps other places that are not so strong in their economy. The U.S. economy is a beast, and we can take a quick look at the GDP stats just to highlight that. If I take a look at GDP growth, you can see that U.S. data here is showing a huge outperformance in terms of GDP growth. So the U.S. economy is just growing at a faster clip than it seems most other places. So when I look at, potential indices that I want to get bearish on for perhaps a global struggling month, my first inclination is actually to look abroad and not try and short the US indices. The top setups algorithm is looking a little bit light here, but I also wanted to take a look at just kind of a sentiment check on the stock market. If I go over to the sentiment tab and we take a look, for example, at the put to call ratio, what we can see here is that puts have started to get a little bit more popular, but I wouldn't say that we're in outright extremes just yet. Remember that when the put call ratio gets very swayed one way or the other, it can be a good contrarian signal. What I mean by that is that when it gets very, very low, you could potentially look to get more bearish. And what this means is that the demand for calls is very high. And when this gets very high, the demand for puts or bearish bets gets very high. So when things get very extreme one way or the other, I get a little bit cautious. So on the short side, I do see that the on the options market, having some protection, buying puts, being bearish is a little bit more of the popular crowd, but I wouldn't say that we're in absolute massive extremes just yet. So we may have room to continue to see some of that bearishness play out, but we do have CPI tomorrow, which could change everything. In terms of sentiment, we can also check the stock market sentiment using the AAII Investor Sentiment Survey. This is a tab on the Edge Finder as well. And what we can see here is that the latest survey shows still a proportional difference here between long and short bias. So what this means is the average investor or trader is feeling pretty bullish still in the markets. And when we see that, that actually makes me a little bit more on the contrarian side, especially when we get more extreme. We've seen in recent weeks even higher, bullishness or confidence. When you get overly confident one way or the other, that typically is a good bottoming or topping signal, at least to consider. It's not always the best at timing, but it's something to play into my analysis. So if I take a look here, at this time when things got very overtly bearish, this early August reading actually was a wonderful signal to potentially look for long positioning or, to go against the contrarian crowd. You can also see that in the put call ratio when it got very extreme. August 5th was actually the low in the stock market sell-off. So if you're wondering which chart I actually ended up playing, it was the EWJ iShares Japan Index Fund. If you're not trading with Webull and you would like to check them out, there will be a link down below in the description. It is the broker that I use to trade directly on tradingview.com. It's very nice for that. Taking a look at the dollar index, the dollar index seems to be continuing to carve out at least a short-term low here around 100.6. And I'd be very interested as we go into tomorrow's CPI day to see if we can take out this kind of level of resistance right here. So I'm going to go ahead and mark this on my chart as well. So this level of resistance was sort of a checkpoint, if you will, on the previous bounce back. So we sold back off from there. The question will now be whether or not price is able to take out those highs and perhaps create a bigger retracement in this downtrend that I think we still are in. Dollar index, if we see a strong CPI print, meaning higher than the forecasted 2.6%, this is, by the way, the forecast for CPI tomorrow, 2.6% year-over-year inflation, which has come down a long ways. That is the forecast, right? Previous time around was 2.9%. So we are expecting here to see inflation cool off even more. And those are high expectations. So what I mean by that is that if you get a print that is higher than this 2.6%, let's say it comes out at 2.7 instead, it is likely that the dollar index will have a bigger push higher as the Fed will be backed into a corner a little bit on how much they can cut interest rates. Remember that the Fed wants to cut rates, but they can't do that if inflation, or they will have a harder time doing that in good faith if inflation is still stubborn or sticky. We've actually seen some really good progress in inflation. I'll show you that chart now. So here's the inflation year-over-year chart pulled up on the Edge Finder, and you can see it's been trending nicely lower. And again, we are expecting a reading of 2.6 tomorrow. And if that comes in line, then that really helps to contribute to the overall disinflation story. But if it comes in higher or doesn't show any signs of in progress, that could throw in a little bit of cold water on the fun party, if you will, on the idea that the Fed is going to cut rates. Now, they probably will still cut rates, but if you get stubborn or sticky inflation, it's possible that that could lead the Fed to cut rates at a slower pace, which could strengthen the US dollar. Now, again, that would not be good for stocks. That would be strong for the dollar. What would that do to gold? If you get a really high CPI print tomorrow, gold would probably come down a lot. And if you get a cool CPI print tomorrow, meaning 2.6, I would say, or lower, if you get less than or equal to 2.6, most likely gold probably moves higher, in my opinion. Now, what we'd be looking for in that scenario would be a breakout through the highs. I currently have a long position on gold, and what I'm looking for personally would be, let's see if we can take out this previous high and finally get ourselves out of this consolidation zone. It's been so choppy here recently, but we'll have to wait and see. So again, a cool CPI print, lower than expected inflation year over year could lead to a nice breakout, at which point I would look to trail my stop loss on this position, which I've been sitting in for like 10 plus days. So I'm waiting to see this thing finally make a break one way or the other. If we break to the downside, I'll take a small loss. If we break to the upside, I'll look to trail stops. And oil is making a big push lower here, down another 3.8% here this morning at the time of recording this video. Oil cannot seem to catch a break. And I mentioned this a few days back, but this big breakout does seem like it is just the start of potentially a bigger slide down. Now, I will say on a contrarian basis and on a longer term play, I do think that there's a possibility that this could be a nice contrarian thing to start buying into or dollar cost averaging. And I've chosen to do that in my own creative way. I'll show you that now. ExxonMobil is a company that, of course, many of you guys know already. They make, or they sell gasoline. They are an oil and gas company. And ExxonMobil is a company that I wouldn't mind having a little bit in my portfolio. In fact, I sold a put a couple days ago. And the idea here is that as oil has been selling off, companies that sell oil and gas or involved in the trade have been slightly negatively affected by that. But the overall business model, in my view, is still very strong, and the demand for oil is not going anywhere. For several decades into the future, it is very likely that mankind will still need fossil fuels, oil, and gas. I know, big bad, big oil is, sponsoring this video. Just kidding, they're not. But you get my point. ExxonMobil is a company I wouldn't mind owning a little bit of shares in, and so I sold a put at 112, and I collected a premium of about $300 for writing this put. Now, when you sell a put, you're promising to buy the shares if at expiration date price trades at or below the strike price of 112. Now you can the options buyer, the person who bought this put on the other side, can execute it at any time, but they would only do that if it was profitable under or near 112. So basically, I am selling puts. I've sold one contract here on ExxonMobil, and if this market continues to go lower, if oil continues to go lower, I will actually look for a chance to sell more puts along the way and actually dollar cost my way into ExxonMobil. So the best case scenario for me actually would be to see price continue to trend lower. I sell puts, get filled on my position, and over the long term, if oil bounces back, which I think it likely will, ExxonMobil and their overall business could perform well during that time, and I can make some profit on the trade. While I'm on the topic of options that I'm currently trading, I've got a couple different things here. You can pause the video if you'd like to look at it. I'm currently trading Nvidia, Google, Exxon, etc. And these are all puts that I've sold looking to capitalize on the recent volatility and elevated VIX readings, which allows me to capture a little bit more premium on the puts that I do choose to sell. If you'd like to see all the trades that I'm taking in real time, I share all of my notifications with members inside of our group. So does Frank, so does Ivan, and we just added a new service called the Pulver Alert service where you can see Chris Pulver's trades if you know him from the live stream. In fact, on the screen right now, we'll put a picture of Chris Pulver. Some of you guys might recognize his pretty face. He's a really nice guy, and him and I have traded together for quite a while now. Same with Frank, who's sending me a DM right now. So if you guys would like to get access to our trades, full context, full breakdowns, we show live accounts, no nonsense, no demo accounts, no Lambo lifestyle. If you'd like to see the trades in detail with everything that we're doing in the markets, that is available inside of the description down below. The first link in the description, by the way, if you send us a direct message and chat with us, we'll give you 35% off just for speaking with a member of our team. The reason we do this is that if you have any questions or you want some clarification about what the service is or what it is not, you can do so by chatting with us, asking that question. And again, you'll get a 35% discount just for chatting with us. So first link in the description down below, guys. Thanks for watching. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.